Assalamu alaikum and welcome to today's lecture. Today's lecture is an introduction to cost and management accounting. In this session, we will explore what cost accounting is and whether it differs from managerial accounting. We will also look at the various application of cost and management accounting in business. And finally, we will wrap up by discussing the difference between cost accounting and financial accounting. So let's begin. What is cost accounting? It is a branch of accounting that focuses on tracking and recording all the costs that involve in producing a product or service. It helps you understand the exact cost of production, which is crucial for setting the right price, controlling expenses, and maximizing profitability. Here, cost of production means we have material, we have labor, and factory overhead. So, cost accounting is all about material, labor, and factory overhead. What is managerial accounting? These two terms, that is, cost accounting and managerial accounting, often get mixed up, but they are actually different in how they help business. So, managerial accounting, unlike cost accounting, which focuses on past and present data about cost, managerial accounting is all about helping managers to make future decisions. This type of accounting provides information that helps manager plan, forecast, and make strategic business decisions. Managerial accounting provides reports on things like budgeting, financial planning, and performance evaluation. In order to summarize, we can say that cost accounting is more focused on tracking cost and optimizing production and processes, whereas managerial accounting is all about using financial data to guide management decisions about the future. They are both essential, but they serve different purposes within a business. So, next, we are going to discuss some uses or application of cost and managerial accounting in the business world. So, the first uses is cost control. One of the main function of cost accounting is to help businesses to keep their expenses in check. By closely monitoring cost across different departments or different products or different services, companies can identify where they might be overspending and where they can save without hurting the quality of their products or services. It is all about finding ways to be more efficient. Next, there is budgeting and forecasting. Businesses need to plan for future, right? So the cost accounting gives them the tool to estimate future cost, creates budget, and set financial target. This helps manager make smart decision about how to allocate resources, which are obviously limited resources, and ensures that the company is on track to meet their goals. Then we move to pricing decisions. Pricing products or services isn't just a guesswork, it's based on a real data, and that's where cost accounting comes in. By understanding the cost involved in making a product, companies can set up prices that cover those costs while also allowing them to make a profit. This keeps them competitive in the market as well as ensures long term sustainability. Another important use is, you can say, inventory valuation. Cost accounting helps determine the value of company's inventory. which is essential for financial reporting. We will learn in the next lecture that we have three type of inventories in cost accounting. We have raw material inventory, work in process inventory, and finished goods inventory. So all three types of inventories are very much important in cost accounting. It ensures that the cost of goods sold is accurate and that the remaining inventory is proper valued, and in remaining inventory and in cost of goods sold we will use all three type of inventories, which impacts the company's net income and hence overall financial position. It is also really useful for performance measurement. Companies can compare their actual cost with their budgeted cost to see how they are going and how they are doing. So, this helps them measure how efficiently they are in their operations, how productive their employees are, and whether their cost saving strategies are working or not. So, in cost accounting, one of the very important function is performance measurement. Decision making. So, on top of that, cost accounting aids in decision making. Although we have discussed that decision making is the main function of managerial accounting, but cost accounting helps in decision making. For example, if a company is trying to decide whether to manufacture something in house or outsource it, cost accounting provides the data needed to make that decision. So it is crucial for both short term and long term planning. Waste reduction is also another important aspect. By analyzing cost data, businesses can identify inefficiencies and areas of waste in their production process. This helps them streamline operations and cut down on unnecessary expenses and increases overall efficiency. For some industries, cost accounting is also um, key for regulatory and compliance reporting. Certain sectors like healthcare services or in manufacturing, you can take the example of a cement manufacturing company. They have strict regulations and that requires detailed cost reporting. So cost accounting helps ensure companies to meet these standards and follow the necessary regulations. Last, it plays a big role in strategic planning. It is not just about day to day operation. Cost accounting helps align cost management with the company's long term strategy, the strategy that will be useful for 5 years or 10 years or even more than that. It provides the information needed for decisions that related to product development, market expansion, or investing in a new equipment. So all these type of decisions are long term decisions. These are strategic decisions. So cost accounting is also helps in these sort of decisions. So as you can see that cost accounting is much more than just a number crunching. It's a powerful tool that helps businesses to control costs, plan for future, and even make informed decision and improve profitability. So now what is the difference between cost accounting and financial accounting? Here we have some major differences. First of all, primary focus or the scope of the accounting. So the cost accounting basically it uh, tracks, analyze, and reports cost of production. We have already discussed that cost accounting is much related with the cost of products or services in order to control and reduce cost. So cost reports are prepared in the cost accounting. Whereas when we discuss about financial accounting, it prepares financial statement to show the overall financial performance and financial position of the business. So, cost accounting is about the costing of a product or services or department, whereas financial accounting focuses overall picture, overall financial performance or position of a business. Who are the audience? So, cost accounting is mainly for internal management use. So, internal managers are the main targets of cost accounting, whereas financial accounting primarily is for the external users. In external users, we have shareholders, we have creditors, and we have different regulatory authorities like income tax authority, for example, FBR or Federal Board of Revenue, or SECP, that is the Security Exchange Commission, and so on. So, cost accounting is for internal users, whereas financial accounting is for external users. Time orientation, you can say that cost accounting focuses on both the past and the present cost, but also looks at the real time cost control. Whereas the financial accounting focuses on historical data. Historical data means you can say when we see your annual report of a company, you can see that we have two columns in the financial statement. One column is the previous year, and the second column is for current year. So generally you can say that it focuses on historical data showing financial results from the previous records. So here, there's a difference between time orientation of the cost accounting and the financial accounting. Whereas the next difference is reporting frequency. Uh, Cost accounting reports can be generated as frequently as required or needed. That is, the reports may be on daily basis, maybe on weekly basis, or so on. It may be yearly, it may be monthly, it may be quarterly, even the daily basis. Whereas in case of financial accounting, reports are usually generated periodically. You can say quarterly, and most likely annually or yearly. Next is regulation and standards. There's no strict regulations is required in cost accounting. Method can vary based on management needs. Whereas in case of financial accounting, they have a gap, that is generally accepted accounting principles, and IFRS, that is International Financial Reporting Standards, and the company must follow these accounting principles while preparing financial statements. Level of details, you can say in cost accounting provide detail, granular data about the cost of specific products, services, departments, or operation. Whereas we have just discussed that in financial accounting, it summarizes the overall financial position, focusing on the broader picture of the organization, whereas cost accounting is for specific product, department, or operations. The main purpose in cost accounting is to improve cost efficiency, cost control, optimize production, and support managerial decision making. Whereas the aim of financial accounting is to provide a fair and a true picture of the company's financial performance and financial position for the external purpose. Legal requirement, cost accounting reports is not mandatory. It is used at the management discretion as and when required by the management. Whereas in case of financial accounting, you can say Preparation of financial statements are legally required for the companies to comply with the financial reporting standards, or you can say IFRS. So that's it from this lecture. In this lecture, we have discussed the difference between cost and management accounting, the cost and financial accounting, and some uses of cost and management accounting in the businesses. So next lecture will be about the difference between product cost and period cost, and variable cost and fixed cost, and we will also discuss some problems that are related with the product and period cost, and um, fixed and variable cost. So that's it from this lecture. Take care, class.